We have amongst us Mr. Sumit, Gwalani, co-founder, Epifi Technologies, Fine Money. Let's welcome Mr. Sumit, our moderator for this session. A big round of applause, please. And I'd also like to take the pleasure of inviting our esteemed panelists amongst us. We have Mr. Harshvardhan Lunia, Chair of Fintech Convergence Council and founder and CEO of Lendingkart. I'd like to welcome you up on stage. Let's have a big round of applause, ladies and gentlemen. We also have amongst us Shri, Vibhav, Chaturvedi, Chief General Manager from the Reserve Bank of India. Let's give him a big round of applause and welcome him up on stage. Thank you for joining us, sir. And we'd like to welcome Mr. Vibhav, Hathi, co-founder and CBO at OneCard. Let's give him a big round of applause and welcome him up on stage. Thank you so very much for joining us. Ladies and gentlemen, we are ready to commence with this panel discussion. I request our panelists to kindly take their seats. Thank you so very much. Your microphones are right here by your side. And with that, I request Mr. Sumit Gwalani, sir, to kindly take the session forward.
Thank you. Thanks for GFF for having me here. I'm actually proud to be in front of such esteemed panelists here. We have Vaibhav sir, who has actually shaped digital lending or lending in India among many other things, and it's a great opportunity for us to understand more from the regulator to understand where lending is going and how trust and consumer protection can be achieved to scale it even further. With Harsh and Vibhav, we have got two bankers turned fintech guys with more than 25 years of experience each, and have shaped lending in the country over the last 20 years. Right, so we'll get a lot of insights today across different topics from all three of them. If we're talking about digital lending has really shaped and changed the way consumers borrow money today. In fact, as per a recent BCG report, the size of the digital lending market in India will be close to $1 trillion by 2030. Now, the RBI has been at the forefront of ensuring consumer protection and enabling trust in consumers through both encouraging innovation as well as in regulations. The digital lending guidelines that came in September 2022 with the FAQ followed in February 2023 actually ensured and helped boost this in many different ways, from ensuring that there was transparency that helped increase trust, to adding more and encouraging consumer protection, and also ensuring data protection was there. It sort of covered all different topics out there. And if I just look back at the governor's speech from yesterday, he talked about how ML and AI can actually revolutionize financial services in India. He talked about how it can expand access to credit and also help with fraud detection. As the growth of AI technologies overall, in fact, one of the reports I was reading from IDC talked about that maybe by 2030, 70% of all loans given worldwide might be actually through AI. Now, along with AI also comes the risks on discriminatory bias and other stuff. How, from a regulator perspective, do you think that you encourage innovation, especially in the area of AI, at the same time balance with the risks associated with it?
Thanks, Sumit. So, yes, you referred to the governor's speech yesterday where he talked about really the huge promise which the AI holds, particularly for the fintech industry. But the challenges which you mentioned are also very real, not just for this particular digital lending industry, but for the larger ecosystem. And all the industries all over are kind of grappling with how to deal with the challenges which implementation of AI throws up. So there are different approaches which different jurisdictions are following. There is no, and this is one area where you really doesn't lend itself to a very straight-cut regulatory kind of a approach or a framework that okay, this is a kind of a no set template for that. So everybody is kind of trying to find the right solution for it. For example, the ECB, the UK, the US, they all have some form of kind of an approach which they are going ahead with. In our context, though specifically we have not kind of dealt with AI per se, but recently we have come out with draft guidelines on model risk management for the entire credit life cycle. So which kind of talks about, kind of deals with right from the credit origination, customer selection, the pricing, and right the risk management. So and across all these points, the AIs could have a kind of a critical role going forward. So right now it is kind of a very broad-based, principle-based approach which kind of relies on institutionalization of a really robust governance framework, because that is the most important part, rather than going into the specifics of a particular model or a particular approach. So if you have the broad governance framework internally in place, and again, I think that's again we are drawing from the international experiences. Most of the principles are based on kind of preventing the negative outcomes for the customers. So that is the key thing where all these principles are drawing from. So that's what this framework talks about. So right now we are kind of taking kind of a step by step, kind of a broad principle first, and then if some overlay is required specifically for any models, including AI, we will look at it.
This sounds great. So the message for everyone here is that look at the draft guidelines, and if there is any comments, provide feedback. Great. So that's for everyone out here developing, credit underwriting models. Please look at the guidelines and provide feedback on that. Just coming on to you, Harsh. Lendingkart's use of AI for underwriting is noteworthy, right? Can you please talk about the technology and how you have used AI, especially to help, build trust and enable consumer protection?
Sure, Sumit. It's a privilege, sir, to be here on this podium with you. Like Vaibhav sir suggested, right? We have all started using AI or ML or algorithms, as we call them, across the customer journey. It's used by us in distribution, underwriting, and collections. But I just wanted to, for this forum, call out a few specific use cases where we have found them very, very useful. One of the use cases, sir, has been personalized offering, right? For these small businesses, actually to identify the right amount of loan, right interest rate, and right tenor, what should be given to them based on their data and availability. We have used AI a lot more. I think with this, what we are able to do for consumer is over-leveraging is one of the key areas, right? In retail that we all need to solve. So over-leverage and responsible borrowing we have been able to solve for through AI. Another important use case that we have been able to solve is in collections. We have not seen too many enterprises still now use it for collections, but it works wonderfully well for us in the sense that in collections, our algorithms themselves classify basically a borrower based on the borrower behavior. So there is a particular borrower who we call it self-cure. So 85% of our borrowers, right, we don't need to nudge them or intrude in their time or everything or give them communication, but they would be prudently providing EMIs back and paying back to us. For the 15% of the customers, we actually classify them into high, medium, and low risk categories depending on what their performance behavior has been. And then based on that, we create nudges where we can reach out to them, guide them, mentor them on their behavior and everything. So that has been a wonderful use case that we have done as well. Other use cases, I think, fraud prevention is an extremely important area that all of us are working on as well. I think we've seen a lot of cases where document fraud happens, where identity frauds happen. So with AI, actually what we've been able to do that if a particular bank statement has already been submitted to us or our institution with another identity, our systems are able to identify that and go ahead and solve for that. So like I said, in distribution, collections and credit we are using, but there are a lot more areas, Sumit, in fraud prevention and other where we can use AI as well.
Awesome. Just remember, getting from your experience, OneCard is known for, the app is known for its user friendliness, right? I think you have an app store rating of 4.8 out of 5 on that. How have you used AI to help you with the consumer journey and make that lives really better?
So I think I'll add to what Harsh said and what Sir said. I think the fact that for retail consumers, any unsecured product or any borrowing product comes with a fear of a debt trap or a burden. It is incumbent on us to leverage technology to increase trust. So the first thing that we did is to build the entire tech stack ourselves as a proprietary tech stack, so that it enables us to provide real-time information to help consumers make decisions. Let me kind of take 3 examples. The first one is if today in a credit card product, consumers have a fear that I might overspend, we have a budget feature where consumers can actually go and say, do not allow me to spend more than 5,500 on dining in this month. It's very counterintuitive for a credit card to restrict spends, but it just makes people very comfortable. On the other side, if you actually want to go and shop for a consumer durable, come to the app, basis your location and your profile. We will sync and give share a list of locations of shops where you will get the best EMI deal. So you go in and don't worry about financing, but you go in to find the right product. The best use of AI that however we are doing is in customer service. Now, while majority of our systems enable and customer service queries are done on chat, you still get calls. And the important thing when you get a call is to see whether how effectively the agent is able to understand and answer those questions. So we have now been able to take the voice and convert it into text in real time, which gives the sense of what the consumer is trying to say and the sentiment. Now, the nuance is when a customer calls, customers don't speak in English. Indians speak in English or English plus a vernacular language. So the challenge is to do that changes in real time, understand and give that. So it's a still work in progress, but we found our NPS increasing when we are able to leverage this even for customer service.
So we see that AI is starting to make a real difference in apps out there, and there's a lot more hope there with step by step, as Sir said, we can actually make a huge change in the coming years, and maybe that 70% number that will take over all loans may be true. We'll see. Right. Okay. Moving on. Digital lending has a bunch of benefits, but financial literacy in India has still been a question, right? Especially when it comes to loans. Are people understanding the loans they are taking? Is mis-selling happening? It's always been a concern. In fact, the government of India released the regulation on dark patterns and what that should be there and what should not be done. And that's, I thought, was a very important step that happened earlier this year on how to sort of control dark patterns and what not to do. If I sort of look at what are we doing, overall as a regulator or as a fintech, starting with you, sir, in terms of how to get more financial literacy, help people understand the loans they are taking or even beyond.
You're absolutely right around this need for greater financial literacy and education can hardly be overstated, and not just in the context of the current digital AI. Maybe these developments further highlight the problem of doing it more. But this has been a problem even in the traditional modes of lending. And RBI, has been for the past many years has been focusing on this area on financial literacy in a mission mode. We have several a lot of content on our website on financial literacy in around 13 odd languages and vernaculars and others. We have been having that annual financial literacy weeks where every year there is a different theme. And in fact, not today, but 3 years back, the theme was to how to encourage responsible borrowing. So and around that, a lot of events were planned, a lot of outreach events were planned. So I'm saying, this has been this is not a thing which can be solved overnight. This is really a ticklish problem. It's a lot more needs to be done, and that's where maybe the role of the industry, and particularly, this digital lending has now created maybe a lot more urgency to those efforts, because the potential for some of the borrowers who are misinformed and really take to this easy availability of credit, that can down the line create huge problems. So it is really, that need is there. From the regulatory side, I think the approach has been, literacy is one part, but to ensure that the industry also kind of all the offerings are one, transparent to the consumer, and all the dealings of the RE with the consumers are fair. So even the digital lending guidelines, I think that was one of the underlying principles which was running through it. And recently the draft guidelines on aggregation of the loan products. There also, the underlying theme is that the consumer has the right to make informed choices, he should get informed choices, and therefore the REs we have a collective responsibility to enable that kind of a framework.
That's great. In fact, if I may just say one thing, right? One of the studies that had talked about that if you can increase knowledge about products, that can actually increase trust by around 30%. And if I sort of commend RBI within the digital lending guidelines to make key fact statements mandatory, actually has played a huge role in improving people understanding about their loans. We don't have actual numbers. I was trying to search for some numbers yesterday, but at least from the anecdotal information that I've heard, I'm sure it's already making a huge improvement in the last 12-18 months. If I move...
one more thing, one quick point if I can add there is that yes, I mean, we've talked about responsible borrowing, but equally important is responsible lending. So that is another area where maybe the industry will need to take the initiative there, and kind of a lot of things need to be done there.
Agreed. And you know, if I come, Vibhav, to you, OneScore's work, you know, on educating customers on credit score and teaching them around it has really been commendable, right? We have seen millions of customers actually benefit from understanding their credit score in India and understanding the value of it. Can you talk a little bit more about it as like what have you done in terms of empowering consumers and, you know, building sort of seeds of financial literacy, at least from a credit score perspective?
I think responsible borrowing is important, and especially when we are a very young nation. An entire generation is going to start their journey on acquiring assets and consumption through borrowing. If they are not aware of what is the impact of a credit not being managed properly, it will create disruptions in their aspirations for futures when they want larger credit. So at OneScore, what we do is we simplify what they have in their credit report and show it to them. So if customer shares a consent, gives the credit report, and then we explain the various nuances. Now the beauty is people, technically believe that credit score kab dekhoge jab loan chahiye. However, the fact is that a lot of segment, especially the young Indians and NTC, so 25% of the OneScore customers do not have a credit or have a significantly lower score. What does OneScore do? We actually have simulators. So I don't have any credit. I can come in and say, let's assume I've taken a credit card. I ran a bill of 10,000. Did I pay? Did I not pay? Did I take a loan? How would my score journey evolve? So it's a simulator. If I have a low score, I can set a goal saying, I want to increase my score by 20 points in 3 months. And it will, based on your specific data, tell you what to do. Then follow it up various contents. So actually, Sumit, there's an anecdote which I heard yesterday from one of our consumers. This is a family of 6 people, 3 generations. Every Sunday, sir, first Sunday of the month, they sit with their OneScore app and they check whether the banks have reported their repayments to the bureaus properly or not. तो उनके लिए वो है कि मेरा रिपोर्ट ठीक है ना, सब ठीक है, and the head of the family ensures that everybody's OneScore is checked on that first Sunday of that month. And this data is on our 50 million consumers who have OneScore. People who have checked their scores regularly have seen a score improvement by 23 score points, which makes them eligible. Their overall credit repayment behavior is 40% better than the non-users. So it's actually translating into people reading their scores, understanding and acting on it. That actually, without selling anything, doing that, that's our biggest satisfaction.
No, that's awesome. In fact, having spent a bunch of my time in the US, right, credit reports used to, almost create some form of fear. Not exactly fear, but like, you would be very mindful if your credit report changed 5 points down or so, at least in the US, right? So at least as I sort of grew up in my like 30s and then moved back to India, it was always a question when I came back to India, man, what's the credit report? When nobody's talking about it, because it used to be a discussion point in the US, but it's not a discussion point here.
But Sumit, let me flip a question back to you. You done work on account aggregator. Isn't that literacy, and what have you done?
So to me, having been associated with account aggregator from the very early days on when, Rabbit and stuff were working on the protocol, I think it is very, very powerful. And I think what we have seen, at least at Five, our goal is to demystify finances for our users. And given that and helping connect account aggregator, where people are able to understand all their finances at one place and then actually make sense out of it and then make good investment decisions, good saving decisions, is actually becoming super critical to understand their money. Most folks don't even understand the kind of fees they get charged for, whether it is for banking, whether it is for investment, and to help them explain what those fees are or how they can save, basic tax credits and stuff that they should get. How do we get that, right? Like, because if I look at finances, we don't learn finances in school here in India. We don't talk about finances like we talk about Bollywood, cricket or politics. In a discussion, finances don't come in. It almost becomes like a taboo topic to talk about, right? And so how do we get people to really learn and understand? Because I think if we can do that more, make this non-taboo, people will know more about their finances and generally financial literacy will grow. Today you will go to your dad or your closest friend and maybe talk about it, but still not talk too much. Right? Only if you're in trouble and you really want a loan or you want something, then you will go there. But how do we make this come in a natural lives daily, right? And at least that's really the goal there to do it. So an account aggregator to me plays a huge role, because if you use the tech and actually if you use AI here and build personalized solutions, we can make people learn, get them to know and short it, but you don't have to give them big gyans of stuff. Can you give them, literally 2-line insights as, okay, here is how they could save, here is how they can do better, actually can have a big impact in people's lives.
Maybe I can add 1 or 2 points from my side. What I've realized is in financial literacy, the transformation that we have seen in the last 5-10 years, sir, has been basically one, use of vernacular. Right? Vernacular has been a very, very strong proponent, where people who are not that much conversant with English have access to information, financial information in vernacular, and then they go ahead and read it and everything. Second important piece is bite-sized products, like you said, right? Bite-sized products, and I think social media has worked wonderfully well on where you can have, I've seen a lot of financial information providers, sometimes good, sometimes bad. Overall, it's a mix of both of them, but maybe if you look at the social media platforms like Instagram or Twitter or Facebook or LinkedIn for that matter, a lot of time you can get gyan. Obviously, you have to verify the authenticity of the gyan and everything, but that's also another piece. And most importantly, as a medium of communication, everything has come on mobile, right? So that again, and mobile, I think as an instrument, Sumit, I feel transcends generations, right? So from the youngest of the guy in the family, like you get 3 generations, to the middle-aged, to the senior, everyone accesses that instrument. So I think financial literacy is moving in right direction. Only thing is we need to create more and more vigilance and awareness about it and take it forward.
Great. I think what I'm taking off here is that for all the participants in the digital lending space, whether they be banks, whether they be NBFCs, whether they be fintechs, we all have a critical role to play in financial literacy in the years going ahead, to go step by step and grow it. It will take time, it will take stuff, we have to do responsible lending too, but at the same time, we all have to play our role to basically grow financial literacy in India. From financial literacy, if I move to sort of financial inclusion, right, and the governor, talked about that being one of the key policy goals as we look at India at 100. The RBI has done sort of, great steps in ensuring and working with the fintech ecosystem that has helped both driving penetration and growth in India. But if you look at the credit to GDP ratio, is still at 57% and lower than some of the developed countries. And we still need to figure out how and what we can do to grow there, right? And so my sort of question here was, what is sort of RBI's view on how do we help the underbanked segment in India and reach credit everywhere in that sense, right? And what role can, according to the regulator, the fintechs, the LSPs, or even the NBFCs, or even the microfinance players play there?
Yeah, see, responding to the first part, as a regulator, our role has been and will be as a kind of an enabler, putting in place the required, the elements of the infrastructure, piece by piece, different elements. I talked about account aggregator was one, the other models were there, and the governor now talked about the unified lending interface, which is kind of what in his words is going to be a revolutionary kind of an intervention in kind of promoting digital lending. So our role is an enabler and maybe intervening as required in alignment with our mandate of one, responsible lending, then the customer protection and financial stability. How to kind of build products around it, models around it, how to take it to deeper, to the unbanked segments. That's the potential is infinite. The industry kind of the digital ecosystem, fund lending ecosystem, the way it has developed, that is kind of the same approach is going to take it forward. So without any specific regulatory nudge in a particular direction or a particular model. So the elements are there, it's how to kind of leverage upon that.
That makes sense, right? I usually take to Lendingkart, Harsh, right? Lendingkart has played a key role in democratizing credit, at least among the SMEs, right? What has worked for you, and how do you think we can really reach everywhere, right? SME is a hard place to penetrate to 60 million plus merchants around the country. How do we get there, according to you?
Sure, Sumit. Sumit, I think in lending perspective, there is a bridge on both supply side and demand side, right? Actually, the institutions who have access to depositors' money or deposit holders are kind of a little bit struggling in infrastructure and those kind of stuff from the supply side or demand side. So from supply side, Sumit, we have basically gone ahead and built a digital lending platform or co-lending platform. We today have tied up with almost 20 plus institutions, largest of the banks and NBFCs who can come on our platform and access the customers. On the demand side, Sumit, there are three problems mostly that we are trying to solve for. One is access to finance, right? In access to finance, if you look at India, has 19,000 pin codes. And in terms of branches and everything, if you look at it, even half would not be covered that much, right? The smaller towns and cities and villages are not covered. So I think what we have, when we started out, was very clear that you need digital and cloud infra, where the customer can reach you from wherever he wants and access your app or mobile web or infrastructure, submit your documents and go ahead and solve for it. That is one. Another important piece in financial inclusion was we had to consider the kind of customer that nobody wants to do, right? It could be what we typically call a thin file customer, or it could be typically a customer who does not have an own property in a particular town or city where he provides KYC and stuff like that. So banks and other institutions have those kind of restrictions, but from our perspective, if I tell you, we have a customer segment that's actually educated, that runs coaching class, computer academy, kirana store, mithai store, almost bank. They have banking transactions and history. These are the customers who have had access to other credit facilities, like they would have access to a consumer durable, two-wheeler, three-wheeler, asset-backed loans, but don't have access to a clean credit or business finance. So a lot of these consumers comes to us and we give them loans. So on the customer profile, we've identified that segment that would not fit in for the conventional enterprises and gone ahead to solve for their financial inclusion. Thirdly, and lastly, overall, what we have realized is that cost of financing has been quite high. If you look at the typical loans that go below sub 10 lakh, they normally don't make that much sense. Obviously from the cost of credit perspective, but cost of delivery perspective as well. So if you have to start delivering bite-sized products or smaller loans, the cost of financing has to come down. And this is, I think, as we have discussed today, right, with building more trust, protecting consumers, giving them digital infra, cloud infra, making them accessible, easily, transparent and everything, cost of delivery has to be brought down for these loans. So these are the 3-4 areas, Sumit, we've been working for financial inclusion.
I'm sort of come up with some questions just hearing from your answer here, right? Access to finance and stuff becomes tough. Is there any collaboration that can be done with banks? Like, what can we do to make that more accessible?
Sorry, that's for me, right? So in terms of Sumit, collaboration with banks, I think one of the biggest strengths that banks have is CASA, right? Current account, savings account, access to depositors' money, transaction data and everything, and they have hardcore CBS, core banking solutions are already there, right? Which is the backend and which actually runs the country for as of now. If we can partner with them, if we can be their front end, we can ensure distribution, we can ensure transparency of data, consumer protection in terms of data. It can be a very, very fruitful engagement with them, Sumit.
No, thank you. There was a touched about ULI, so I'll sort of go to digital public infrastructure in general. RBI has been the forefront of building digital public infrastructure in India, from UPI to account aggregator to now ULI, which got announced this week by the governor. It seems that ULI is the big bet for DPI when it comes to lending. If you wanted to just double click a little bit on ULI a little bit more, how do you see ULI changing the face of digital lending for all the participants involved, both the banks and the NBFCs, in making digital lending grow even further?
Yeah, so yes, I mean the term ULI it was of a recent coinage, but the project itself has been, in fact, it was almost exactly a year back that the pilot on the public credit registry was announced and the pilot was initiated. So a platform which was under the aegis of the RBI Innovation Hub, so this project was going on. So they were trying on different kinds of loan products, different kind of data elements which can be brought in. So the whole concept of this ULI is basically a kind of a one-stop shop for all the data requirements, all the disparate data requirements, particularly the non-financial data. So over this 1-year pilot phase, different kind of data elements have been brought in, including the state-level land records in some cases, the dairy records, and then the whole KYC journeys, the KCC journeys have been kind of successfully done in some cases. So it has been kind of evolving over a period and still in a pilot stage. So, and in due course, as Governor announced, it will be launched full-fledged. As to what impact it will have, I'll again go back to my earlier reply that this is kind of an enabling one more piece, critical piece in that whole DPI whole framework which is there, which will then be available, and then how it is leveraged by different stakeholders. I mean, conceptually there could be different models, different arrangements possible, and all stakeholders will potentially have a role to play.
Also, if I just ask you one more question, right, along with ULI, which is more from the data access point of view, there is also others that's connecting suppliers with demand from an LSP stuff. Any thoughts on ONDC, OSEN from a regulator viewpoint? Any just early thoughts from your side?
So yeah, I mean those are kind of different initiatives which have been going on. So our kind of a broad approach there has been that as far as the engagement of the regulated entities or the lenders are concerned, there is already a broad framework in place, which is the digital lending guidelines. So that's the broad approach. Within that, I mean, all these initiatives can.
Also, if I come to Harsh, you and Vibhav, right? I'm sure you're starting to use already various DPI frameworks that actually make digital lending easier and possible. Can you talk a little bit about that and how it can actually impact and use to help with both trust and consumer protection also?
I think fair point. In terms of, like sir suggested for ULI as well and DPI as well, right? I think India Stack was the first generation and all of us have seriously benefited from them, right? In simplifying and smoothing the entire processes. For ULI, I think it will again be a next level of game changer in simplifying and standardizing the entire access to data, robust data frameworks, data protection, sharing of data, quality of data, and everything. So I think, like we have seen, right, I think pre-COVID there was a time where we had people even concerns around using UPI, right? Maybe 17, 18, 19 we had transaction failures and everything, people were not sure, right, if it will work or not. And post-COVID you see a marked transition in UPI use and the kind of transaction, volume of transactions we are seeing. Similarly, I think with ULI and all the DPIs that are getting built in the country thanks to the regulator and the ecosystem, overall it could be a drastically game changer for all of us, right, overall, because again, I think myself both from the perspective of one creator and second user of that data. If I know that my data is going to be shared in a responsible manner, is going to get used in a responsible manner, and I am going to be offered that service in a responsible manner, it makes a lot of difference. I think in terms of trust and consumer protection, all of that we are getting and seeing in ecosystem is one of the, I think, best in the world, and overall it will help the ecosystem a lot more.
Cool. Vibhav, anything to add?
I think Harsh has covered a lot, but I think consent is another aspect. You know, how do we record consent? What purpose? Duration? Revocability? I think that is another key aspect which will enhance consumer trust, and that is what we are working on. In addition to a lot of things that Harsh said.
Cool, thank you. We are down to 4 minutes, but I have a few more questions. I want to ensure all of you get an opportunity to ask at least a couple questions out there. If you can have the mic, hands raised for some questions. We get one here. Can we get the mic there for the first question? While others who have questions, just keep your hands up and I'll try to get to a couple of you.
Hello, can you hear me?
Yeah.
My question is to Vaibhav, sir. Right. There is RBI guideline for lending companies when to call, how many times you can call per week, and what's the time duration. But now with AI, we can monitor each and every call. So is there a compliance coming for lending companies wherein they have to submit an audit report of what content has been spoken in the calls? Because there is some unfair advantage on the consumer for lending companies that people usually don't take that extra step of mailing to RBI, recording the what abusive content that agents share. So usually companies take this as an advantage and they speak whatever they want. So is there something coming along those lines?
Point taken and noted.
That's it.
Okay. Let's have one question in the center here.
Yeah. So I have a question
So
with,
we can take one
for
question
Vaibhav,
right
sir.
now. Who's the person asking the question, please? Yeah, this will be the last question on this forum.
Go ahead.
So my question is in fact to Vaibhav sir as well as Vibhav. So sir, while we see that various fintechs have come up with the issuance of the card on various platforms, but are we having a consumer redressal mechanism in place for such customers who are having grievances, because they are not the actual card issuers. The card issuers is the back-end bank who is issuing it. It's just the platform that is being provided by the fintechs. So how are we addressing and bridging the gap between the fintech provider and the bank? Because I personally have not seen any strong grievance redressal mechanism on that platform.
No, well, the whole approach for RBI for this whole digital lending and the fintech space has been that the RE has to take the prime responsibility. The entity which is the lender has to take the prime responsibility. I mean, they can tie up with this fintechs, and that is why this whole digital lending thing, I mean, they were specifically, they were recognized as LSPs who kind of get into tie up with these banks. But whatever offerings they are giving, ultimately, it is all the obligations which are there on the RE for their direct lending, that same obligations are there for any lending or relationship through these fintech partners. So same grievance redressal mechanism would be available.
Good, okay, I think we are running out of time. We're told that we have to sort of end there. Thank you everyone. Thank you esteemed panelists. It was a pleasure talking about digital lending and how we can grow, and there's responsibility for every player in there to sort of do it correctly and do it well. Ensure consumer is sort of at the center and the consumer obsession remains for all of us to actually grow this sector. Thank you everyone for being here. I know there were a bunch of questions there. A few of the panelists may be there to answer some of the questions on the side, but thank you everyone.